This is a Stock Trading Reality Podcast, episode 116.
Kind of was able to step back, evaluate, get my confidence back, maybe adjust my strategy right to not only the market conditions, but maybe what I was doing from a risk-reward standpoint.
This is the Stock Trading Reality Podcast, where you get to see the realistic side of a trader's journey. Get inspired and stay motivated by everyday normal people who are currently on their journey to trading success. And this is your host. He sometimes misses the good old days of I am ClayTrader.
I don't know, maybe it has a soft spot in my heart because this was the tool that kept my wife and I in touch with one another as we did our long distance thing before eventually getting married. But I am, for some of you, what? AOL Instant Messenger. You could leave like little cool profiles, and then you could, if you were away, there was like a little post-it note next to your name, so you'd click on it, and then you could, read what this person was up. So off at class right now, yuck, just all sorts of different away messages you could leave. And that was it. What was my freshman year of college was when someone was like, hey, are you on Facebook? What? Facebook? What is Facebook? Well, yeah, it's like invite only. So before, that time period, AIM was where it's at. Ches, I know you're a tad bit younger than me, but were you always part of the Facebook, messaging thing or texting?
No. So
So you got some IM stories? Okay.
Oh, I got some IM stories. So first it was MSN Messenger, and then
that's
AOL
right,
Instant Messenger came out. So then we were all there. And but yeah, the thing, you nailed it for the Facebook thing is actually, I remember we had people, essentially you could only get an invite if you had a college email. That's like
right,
what it was intended for. So we used to have friends that graduated and it could send us an invite. If you had Facebook, you were like a cool kid. But no, we had, I guess for high school, we had stuff like MySpace and gosh, all these garbage type websites now. Most of them are obsolete.
I remember.
Yeah. But AOL Instant Messenger was how we all talked. That was the equivalent of how everybody communicated when you weren't in school. There was no phones and text. I mean, there were, but phones were just kind of coming into the picture at that point. But yeah, AOL Instant Messenger is where I spent way too much time. It's actually where I communicated with my wife because she lived 60 miles away. So for years.
So you can relate to what Abby and I went through then with the long distance thing. Thanks to AIM. And I just remember the buddy list. You could drag it down and see everybody, and then. Do you remember little post-it notes that would be next to people's names, which implied they were away, but there was, an away message that they left?
Yeah, you could leave a message, and I'd have, like, song quotes and all this cheesy stuff, and, oh, boy, it's been a long time.
Yeah,
we're getting pretty old here.
It is crazy to think that, we are old. You summed that up perfectly. So today, though, we have a great episode for you. We're bringing back a staple of the community, as I would call him, RD Trader, is what he goes by in the chat room. And like I said, he's been around. He wasn't quite one of the original 300, but he made a comment that, he's coming up on his 3-year anniversary being part of the site. And he's still in the markets. He's still surviving the markets. He's still fighting. He's adapting, as you'll hear. But great journey, great insight. And again, for you as listeners, if you've listened to some of these, comeback episodes, you know that it's kind of free-flowing conversations. There's not really a whole lot of structure to it. We're just hanging out talking. But with that, once again, at least in my opinion, we came up with some very important talking points that both new traders and then veteran traders, can hopefully benefit from and just, offer up a reminder or what have you. So without further ado, let's get in touch with RD. RD, welcome back to the show.
Yeah, thanks, Clay. Thanks for having me.
Yeah, let's see. Ches, once again, I don't know, maybe you haven't failed, but I know RD has been on the show twice before, one time for the 2-year episode and then once just for his first. But do you remember what episodes those were?
Some point I'm going to remember on these comeback episodes to look this up in advance, but no, I'm very bad at this, but it'll be in the show notes.
Yeah, do you have any idea, RD?
I think the first one may have been episode 4, and
4? Oh, we got to check this just to make sure. Let's see.
Is he one of the top 10?
I feel like
it was early.
Episode.
I wanted to say top 20, but
episode 5. Wow.
We got
5.
a top 10 right here.
And I don't remember what when I say 2-year, not of the podcast, but just of ClayTrader.com, the site. We had a 2-year anniversary, so we brought you back with Doc and I think Nate Wilson. But wow, episode 5. So, and we talked to Pendar a couple weeks ago. He was, I think, top 15 episodes. So yeah, it's great that people like you are still surviving the markets, because that's been a couple of years ago. I don't know if we have the dates on these things or not, but
I want to say I'm coming up on my 3-year anniversary.
Is it really 3 years? Holy smokes. Well, why don't you give listeners, now again, for you listeners, if you want to kind of get the full picture of things, I'd say go back and listen to episode 5 first, and then you'll hear, kind of RD's in-depth, detail-by-detail journey up until that point in time. But for listeners right now, why don't you give us a nutshell kind of summary of pretty much what got you interested in the markets, how you were trading, and just kind of nutshell everything in a few sentences.
Yeah, so I think just from a high-level perspective, I had an investment class in college, a few buddies that ended up working at a broker here local to me, and then obviously during the marijuana pot stock boom back in 3-4 years ago, a lot of them had been kind of participating, and that's initially what got me started. I had taken a little bit of money from that investing class and opened up an E-Trade account. Obviously burned through that money trading penny stocks, and then I can't remember exactly how I found you, Clay. I think I actually accepted that until I got educated, I was gonna lose money, and somehow along the line I had found your program. That's kind of where I got started with you at. For the progression from there, obviously, has been evolving from penny stocks into pretty much a full-time options day trader. And that's the beautiful thing about the market, right? Is there's so many different vehicles and ways to do it. Now I've had to adapt from there into almost kind of like a semi-swing trader because of the new job I recently took at the beginning of the year. So I'm getting to day trade 1 or 2 days a week, and then the other days of the week I'm getting to kind of set positions in the mornings and check them throughout the day. But I've kind of evolved. I'm doing kind of futures and options now, mainly the E-minis, the ES. That's about the only futures ticker I trade. So it's kind of a mixture of day trading and swing trading options and that ticker.
Okay, cool. So we know what you're up to right now, but do you have any idea where you kind of left off with the last podcast? I mean, is at that time were you still day trading the options?
I don't even think futures are in the question at that point.
Yeah, I don't think so either. I mean, I'm just remembering back. I haven't listened to that in a long time.
It's great. Yeah, it's like literally going on almost 3 years. So that's a long time to go back and listen. But so you got a new job at the beginning of this year, 2017?
Mm-hmm. Correct.
Okay. So what were you doing before you got the new job trading-wise? Because that was obviously still after the podcast. So what kind of trading and what were you focused on at that point in time?
Yeah, I mean, really, I guess I promised you the last podcast I was just day trading options solely, right? I can back up into the beginning of 2016. That's kind of when I jumped into futures.
Yeah, that'd be perfect.
Yeah, and I remember when the market was getting pretty crazy with a lot of the China news, things of that nature, and that big kind of, I hate to call it a flash crash, but that happened early in 2016. I kind of decided I wanted to start trading futures. That's when oil was kind of making its rebound from the 25 levels as well. So I really focused there for 4 or 5 months on strictly paper trading futures. I mean, I even remember back where I completely had shut down the options platform and said, I guess in February of 2016, there was a couple of weeks where I decided, okay, I'm going to try the futures. I was still trying to day trade options and also paper trade futures, and I ran into some issues with that, as you could imagine, right? Trying to split my mind share, if you will. I actually went 12 weeks. I think Ches remembers this. I completely went 12 weeks where I shut down the options platform. I said, if I'm really going to try this, I'm really going to focus solely on day trading these futures. Because I think for a lot of things, I think Hooch brought up in his podcast recently as well, futures is no different, right? It's a chart to chart. Once you learn the nuance of what's the dollar value per tick, how they move, and what the news events are around each individual futures ticker, that's kind of the baseline, right? And once you get that, it's trading as usual, whether it's an equity or an option. But when you have never traded them before, you have to learn. Like he mentioned, the oil report comes out every Wednesday morning at 10:30 Eastern. There's the Fed minutes, and and when Yellen speaks, that's when the ES moves. So there's things like that you have to learn. Anyways, long story short, I shut down the options platform from about February to April last year and solely paper traded futures, right? And that's kind of what got me in my feet into the water, really understanding them, understanding the nuance. That also kind of led me to some other things, right? Just internals. I know internals have been a big thing for me, even trading options, but that's really a valuable tool for me in trading futures as well. kind of getting the pulse of the market, if you will, during the day. A little bit of volume profile mixed into pivot points. So yeah, I mean, that's kind of what happened last year, right? I kind of evolved from an options day trader to really hone my craft for about 3 months on trading futures, then went live, and I mean, pretty well documented. I think everybody knows my first endeavor with the futures just didn't really go well, right? I don't know if you want me to stop or just kind of keep going there, Clay.
No, I want to loop back before we get into kind of your first futures endeavor, because I do remember me and you actually had a phone call about this was about the time you were doing options and futures at the same time, and I vividly remember talking, and I was like, you know what, it's just too hard for you. I mean, you got 2 different platforms open. You're trying to manage one that's live. You're trying to manage another while you're paper trading and stuff like that. And I was like, just like you said, splitting your mind between those two is an extremely hard thing to do. And I think this actually ties in, and I want Clay to weigh in on this too, especially when you're a newer trader. You might have 4 tickers you're watching or something, and even as a new trader, that might be too much. You should probably focus on just whatever one you think you're going to find active opportunities in, because it's true that once you split your mind between multiple things, and if you're managing more things than once, there's more opportunities for mistakes. And but no, I was definitely happy to hear when you were like, yep, I would rather risk not making any money in my live account than to actually practice futures, because that's ideally what you want to do. But yeah, well, Clay, what do you think about that, especially for newer traders splitting their attention?
Yeah, I mean, it's essentially, I've never played the drums, but I think this is a good analogy. But it's like, okay, if you want to learn how to play the drums, you got to like focus on one drum. Like, okay, let's just go on the snare drum and get a rhythm down, and then you throw in something else. And then you throw in like the cymbal, whatever what's the round goldish thing? Is that the cymbal?
That's a symbol. Yes.
Yeah. So you throw in another thing, and that's kind of how trading is too. You can't just expect to sit down at the drums and be like, all right, here we go. And I suppose you can do that, but it's going to sound terrible. There's not going to be any rhythm to anything. So, but yeah, that's it makes for, especially not even in RD's case, if you're looking at options and futures, yes, a chart is a chart, but there are little nuances where each instrument is different that, of course, you have to learn. Yeah, once you learn charts, you're probably about 80% of the way there. But that extra 20%, that's going to make it difficult if you're trying to judge back and forth. But my question to you, RD, was, I know you wanted to, maybe I just didn't hear you or whatever, but what drew you into futures? Yeah, people in the chat room started talking about, was it just a matter of, there seems to be a lot of opportunity there because of what was going on with China and oil and stuff like that, or what drew you, into futures in the first place?
That's a good question. I mean, obviously, I've had some success day trading future options, so it was kind of like why I changed from that. But to be honest, the short answer is I feel like it's a better day trading vehicle. And again, this is all personal preference, no different than traders trade their own way as personal preference. But, with options, the whole time factor, the theta decay, when you're trying to trade them long directionally, you're always kind of fighting an uphill battle, right? And I've had multiple instances where I've been jaded, where great trade setups on the chart works out, but maybe it takes a couple hours to play out and you actually lose money on the trade, right? And again, those are all nuances of trading options. It's not good, bad. It is what it is, right? And you have to be aware of those when you trade them. But for me, the biggest draw was I feel like it's just for me, in my style, if I'm actually going to be day trading, as far as sitting in front of the computer or having maybe a minor swing trade, right? Maybe buy in the morning and see how it plays out throughout the day when you get these directional moves. I just felt like it was a better day trading vehicle. I understood it was highly leveraged. So, understand... Yeah, that was kind of the main reason for me to really step back and paper trade, right? So once I made the decision, like, hey, I feel like this could be a better day trading vehicle for me, I want to really understand the nuance, and I understand it's highly leveraged, so that sword cuts both ways, right? And that's really what kind of prompted the decision to take off live for 3 months and solely focus on them, because I wanted to be sure that what I was doing was working, and then that's kind of the next thing we'll get into, obviously, right? The results of that.
Yeah, no, I can tell you're a very mature trader now, because it's not like you're sitting here... you can always tell who's new because they'll just like throw some strategy under the bus. Like, oh no, day trading options is stupid. Like, why would you ever buy options? Dumbest thing ever. And they say it like it's totally wrong. But you understand the fact that, I can think about Sean, Hooch. We have many people in the chat room that do just fine going long options and day trading them. But to your point, it's all personal preference and that's why I say it shows a lot of maturity where you understand that there's no right or wrong way to do it. There is a right or wrong way, but as far as what vehicle you want to use, that's where you got to narrow things down. And for you listeners out there, that's why you have to be so careful if somebody's out there saying, I'm going to teach you my strategy. Well, yeah, maybe their strategy works for them. So I'm not going to take that away from them because maybe their strategy works for them. But you're not them. You're going to have different personal risk tolerances. You're going to have different just quote unquote things where your gray area is going to be different than their gray area. And just because it works for them, it doesn't mean it works for you. So that's always one of the, hey, somebody's calling somebody. But that's one of the biggest red flags out there. If you're searching for education, somebody's trying to proclaim they got this strategy for you. Here, if you talk to Ches or I in the customer service box, we're going to say, yeah, our strategy is charts. What does that mean? That's so broad. Exactly. It's broad. It's a tool, and then it's up to you to take that tool and fine-tune it to what best suits you. So beautifully explained there, RD. I love how you didn't throw any other strategies under the bus. You just recognized for you that futures seem to be what you felt most comfortable with. Now, I threw out the number already that you know charts. You're really good at charts. Would you agree with me, or was I kind of? I mean, what is your estimation in terms of? I said 80%. You know charts, so you probably have 80% of futures understood. Was I being too generous, or was I maybe not being generous enough? But how much quote unquote more did you have to spend in terms of learning futures after you'd already known charts?
Yeah, I mean, I feel like it was pretty close. I'd actually probably put it closer to 90%.
Oh, wow, okay.
Because in reality, I look at it as, if you're a technical trader like we are, right? Not fundamentals. If you're a technical trader, charts are your avenue into that, correct? That's your platform. Charts are what gives you the information for the patterns. It reads the personality of the buyers and sellers, right? So that's most of it. Again, each individual ticker, it's futures are no different than equities. Like when an equity has a earnings report, for example, right? Highly volatile event, you usually trade it a little bit different because you understand the risk, right? And when these when crude oil, for example, has the oil report on Wednesdays at 10:30, it's almost like a miniature earnings report, right? You understand that it's probably going to be volatile. Things could happen. It's a very news-driven event that happens weekly. So really, like I said, I would put charts at 90% because when the technical analysis piece is the same no matter if you're trading futures, options, equities, whatever. Understanding the nuance of the vehicle is kind of almost its own separate individual portion of that, right?
Yeah, no, I would totally agree with that. And
so you would be more towards the 90% mark too then, Ches?
Yeah, I was just going to say I totally agree with that because honestly, as I always say in a bunch of podcasts, is that charts are just essentially a reading of people. Just like you said, it's almost the personality of the traders, and that's why the patterns, things like that kind of play out, most of the time. But the other 10% is just like, RD was saying, it concerns, financial reports that are essentially just earnings for. It essentially acts like an earnings report for just the futures markets. The whole market will generally react, but the futures can get extremely volatile, and it's definitely, you don't trade it the same as like a regular session hours. You can have big sweeps up and down, so you should expect to get whipped out and things like that. If you're going to play it really tight, and at the same time, your risk parameters should be different. Like you shouldn't be trading whatever your full size is, and I don't care if that's 1 contract, 2 contract, 5 contracts. If you're only trading 1 contract, you should probably avoid those reports altogether, unless you're keeping your risk really small. But the other 10%, and I want RD to weigh on this, is pretty much just figuring out tick values. And for example, I know you and I used to focus actually on the mini Russell before it went to that awful ice exchange. Boo. But yeah, it's coming back to CME, thank God. But yeah, the Russell actually had much larger sweeping moves than the ES, and that's why I actually used to focus on that one. And that's just like, already said, that's part of the 10% of just the nuances of particular products. Oil was absolutely crazy at that time. I remember all I would watch was oil, gold, and Russell futures. But yeah, those are the moving things. But yeah, you have to be aware of the climate. It's not straight up cut and dry. They all act kind of differently in their own regards, but essentially a chart is still a chart.
And they all have their own personalities then, because I mean, we have the video and we'll link it in the show notes. We talked about it in regards to options trading, but you got to get romantic with things. So it sounds like from me listening as an outsider that does not trade futures, you can get romantic with a futures contract too, because they all tend to trade a certain way after you get to know them. Is that a fair statement on my part, RD?
Yeah, I think it's fair. I mean, honestly, the best way I could maybe help explain this though is I remember not knowing what an option contract was, and I remember once upon a time not knowing what a futures contract was, right? I can remember being that guy saying, wow, that sounds so complex, and what is this big mysterious thing? You know, being a new trader several years ago. I mean, really, it's just another vehicle, right? It's a chart is a chart. It's no different than an equity. The only thing different is how it trades in tick values versus, you know, penny on the dollar type stuff, right? So, I mean, it's really, once you understand, it's not this big mysterious, you know, powerful thing. It's just another vehicle, another chart, and once you kind of get your head wrapped around that and the small nuance around it, you feel, you know, for me at least, I felt comfortable pretty quickly in that environment.
Well, that's a perfect segue. So pretty quickly, so what dictated the 4 month, you said 12 weeks. So what is that? 3 months, 3 months of paper trading. Some people would say, well, that doesn't seem very quick to me, but what finally clicked? What finally did you see? What did you feel? I don't know, but what caused you to say, you know what? I'm ready to go from paper to real money with futures. I mean, walk us through that, because I think that's a common question is, well, how do I know when it's okay to go to real money?
Yeah. So, well, and real quick, I did say quickly, but that didn't mean quickly to real money, right? I just said quickly. I understood it even when I was paper trading. You know,
are you a lawyer? Are you trying to lawyer me up right now with all these little? I like it. Playing my own game. Well done.
So, but to your, I guess the short. I mean, again, not to keep using the short answer, but I kind of had a little bit of fool's gold, right? It's kind of a really valuable lesson when
on paper you had fool's gold.
On paper,
okay.
Very valuable lesson I learned last year was that no matter how long you've been trading, you can always revert back to the mean. And when I say that, I mean you can always revert back to old bad habits, right? I mean, 2 years into trading, I mean, you wrote that article, right? I had some success that fall trading options, right? I mean, you know, actually had to pay taxes on profit. You know, it was a really good year for me trading options, right? So I think, a little bit of, I hate to call it cockiness, but I've got this figured out, right? I go into paper trading. Well, guess what? I was paper trading the very volatile period, right? Wasn't a sideways market. It was a lot of directional moves. Spent the 12 weeks trading that type of environment. And as luck would have it, about the first month I went live, and I could actually pull it up here on the chart, we had about a 3-week sideways move, right? And I didn't adapt my strategy. So I guess the easy way to say it is that I really thought that I had one strategy, right? And when it turned from a very heavily directional market into a sideways market, I didn't adapt, right? I didn't really know how to adapt. I just kept, I kept every day going in with the same mindset. So really it was long story short, the first, 2 months I traded, I actually, lost some money, actually pulled out, realized about 8 weeks in, like, hey, something's not working, right? Let me just back out, go back to paper, figure out what's going wrong. And that's kind of what I really assessed when I backed up, right? It was, hey, I didn't adapt. I went in thinking this one model was going to work, even though I didn't recognize the market conditions had changed, and that I kind of allowed myself to fool's gold, right? The paper trading was going good, but I kind of had a little bit of fool's gold in the sense of it was in a heavily directional market, and market conditions change, and you have to be able to adapt when they change, right? So a lot of valuable lessons came out of that kind of first 2 months of live with futures.
And it brings up a great point, because it's just, like you said, you had experienced one environment on paper and then another one when you went live. So for me, I was actually the complete opposite. When things were flat, life was great for me, because I would just buy support and sell resistance all day. And then when one kind of snap went up or down, that's when I was like, oh my gosh, what's going on here? This is like way out of my wheelhouse here. And you got to pump the brakes. You take your losers and you're like, whoa, like this is definitely different. But yeah, it's kind of becoming I don't know what the phrase, what is it, master of all trades or something? It cuts both ways, though, because the market has generally two modes, a very, very calm mode, and then another one where it could be swinging wildly up and down. And if you can learn how to trade both of those, and I think even more importantly than even learning it, even if you're capable of recognizing when this environment isn't your strong suit and just backing and hitting the brakes and backing out, like that's a much, honestly, I think that's probably even better than learning how to trade both. The recognition is probably the hardest thing, because you have no idea if, we just snapped, support just for a little bit and it's just a fake out. You don't really have any way of knowing until you get completely swept to the downside or upside. So yeah, that's actually a completely crucial point. And once you kind of come out of your comfort zone, that's when, for me personally, losses started accumulating. Yeah,
I don't know. I had a question. You said you didn't know how to adapt. is it you didn't know how to adapt, or you just, for some sort of mental roadblock, got stubborn and refused to adapt because your paper trading strategy had been working so well? I mean, because I find, listen in, I know you're a trading ability, I know you're a charting ability, so I find it hard to believe that you didn't know how to adapt. It sounds to me like it was more of a psychological thing going on, or did you literally not know how to adapt?
No, I mean, I shouldn't have said not know how. Obviously, I understand, especially when you get channel-driven markets, right? You supports, resistances, you bounces. I mean, just kind of like, I hate to call them rules of thumb, right? But different market conditions dictate different type of trading. You're not looking for the long bi-directional move that's going to run 20, 30 points in a day, right? That you just don't get those in sideways markets. The problem with me is, I guess it wasn't that I didn't know how. It's not that I didn't know how to adapt. I failed to recognize it, right? When I really, after about, I think it was 7 or 8 weeks of trading live and just seeing the results and said, okay, let me step back, right? I really went back over the 8 weeks, and that's where documenting your trading really comes in handy, right? I was able to go back every day. I was taking screenshots, I was marking trades, I was writing down my emotions, my thoughts. I even did it in the forum for a little bit on the site, right? So to be able to go back and look at that, that's when I quickly identified that I literally was not recognizing that the market conditions had changed. And that's why I hated to use the word cocky earlier, but I think that it was going so well on paper for those first 12 weeks and the market conditions that I just felt very confident. Like, okay, the first 2 weeks, for example, oh, it's not working, it's just bad luck, right? I kind of made myself buy into the fact that it was just bad luck, right? Oh, I've proved this doesn't work. Not like 12 weeks is a big data set, but to me at that time I thought it was, right? Oh, it's worked for 12 weeks, just keep plugging along, right? Just keep kind of square peg, round hole. Let's just, this is bad luck, let's just keep trucking. And it wasn't until, like I said, I took time off and backed up and evaluated that I kind of realized what had happened.
I think I'll defend you a little bit in the sense of, because you also don't want to abandon ship way too fast. Because, yeah, maybe just for a week or two, something weird happens and you got to just stick with it and let, occurrences, you got to just let trades play out over time. But the big differentiator here, and I love that you brought that up, and perfect segue. You have not heard the previous episode with T. Fletch, but he totally talked about documenting things and going back, and we had a great discussion on that, as I'm sure Ches remembers. And you did the same thing, but that's what separates the question, well, is this just a bad luck streak or am I missing something? Well, when you document, like you said you did, you can go back and start to answer those questions where a lot of people, they're just floundering, they're just a fish out of water because they really have no idea how to answer that question. Is this just a bad kind of string of luck here? Because, yeah, not every single trade's going to win. And just because you go on a little bit of a losing streak doesn't mean there's something wrong with your strategy. But it could also mean there is something wrong going on. But without the documentation, you're just not going to know. So 2 weeks in a row, 2 traders, and 2 great examples of how documentation, isn't that interesting, Ches? Like I said, RD at the time of this recording has no idea what T. Fletch said, but he just basically summarized, what T. Fletch, was talking about in last week's interview.
Yeah, RD, how are you puppet trading his podcast? We didn't even release it yet, man.
Yeah, this is like what's going on here? But isn't that interesting, Ches?
Yeah, it really is. And actually, I used to have I forgot what it is. I think I talked about it in my podcast 1. See, I remember that one, Clay, because you had to.
Impressive. I'm impressed.
Yeah, I think it was called Trader View, and it used to actually link to my brokerage, and it would download my trades, and then I could just type in notes for it, and it would show the charts actually when you would buy and when you would sell. It was a great service. I absolutely love them. But yeah, I actually fell away from that, and I probably shouldn't have, because honestly, without like detailed records of things, it's very hard for you mentally to just kind of get out of what you assume is the norm. And to have hard data, this is the same for like budgets. A soft budget isn't a budget. It's just in your head, and you think it's a budget, but it's really not. But yeah, hard data is extremely beneficial, especially for trading.
Yeah, and are you still doing that right now, RD?
Yeah, and it's a lot easier now because, like I said, with the new job and pretty much being on the road Tuesday to Thursdays most weeks, like obviously I don't have as many trades.
Nice.
So it's
okay.
A lot
we're skipping ahead a little. Sorry, that was I totally led you down a path that we're skipping way ahead. So we'll cross that bridge later on. But documentation
yes, I am. How about that?
For you,
yes,
for you listener. There we go. So your first rocky roads, rocky waters with your paper or with your real money with futures, and then you tap the brakes. So after you tap the brakes and kind of reassessed everything, what sort of time gap are we looking at before you jump back into the waters with the real money?
Well, I want to make one point too, and this is kind of the power of having a community. And this, I mean, I think sometimes we take for granted that like we're all in there every day talking to each other, right? Because it's not like we're in there talking about course material and stuff, but just general trading advice, right? So I was struggling, obviously, like I said, Ches mentioned, like we'd had phone calls, right? I've talked to Hooch, and then, you know, Michael Roach, just kind of was just talking about what was happening, right? And especially MR was emailing me one night, and he made some very good points, and I really understood that. I can't remember if you were talking to Hooch about this on one of the past podcasts, but you know, what it really boiled down to was after identifying the market conditions had changed, I still kind of had some issues. I mean, I was essentially trying to trade ES with like a 1 to 1.5 tick stop loss, right? And when you really break that down into a percentage of the value, I mean, it was such a tight stop, right? It was so tight. You know, just, I mean, not to get too deep into it, but there was just some things like that really the power of the community really helped me with, right? I mean, just talking to people, other people that have been in here, right, in the trenches with me for 3 years, right? You, Clay, you, Ches. So really kind of getting my confidence back, really. Kind of was able to step back, evaluate, get my confidence back, maybe adjust my strategy, right, to not only the market conditions, but maybe what I was doing from a risk-reward standpoint, right? Fewer contracts, widen the stop a little bit to kind of not get shaken out in some of those times, as we all know ES loves to do. And again, those are very situational things, but just to give you an example. So after, like I said, I papered for 3 months, traded live for about 7 to 8 weeks, pulled back, and I actually waited about I think it was about 2.5 months, because at this point we're out into July, right? I mean, you got to think I started in February, went all the way until almost May, and then June and July is when this kind of happened with live trading, correct? So not only are we in the middle of summer, Clay, I remember you and I have talked about that multiple times during that stretch, right? Summertime,
Yep.
Summertime blues. Now we're starting to get into the Labor Day time frame, right? And I'm starting to think, okay, let me go back after this. And really, I really just slowed everything down. I mean, like I said, I took my adjustments, and I was now aware of those. I'm not going to call it a new strategy, right? But I mean, it's still the same thing I was doing, but it had an adjusted risk-reward profile, so I kind of had wider stops. And I took far less trades, too. You know, that was another thing that we didn't talk about, kind of some of my issues. I mean, there was one day, I remember Ches talking to me about this. I mean, there was one day I was trading 50 contracts, right? And that's just not me. You know, so I was kind of out of what I would call like my personality bubble. You know, I'm very used to trading, maybe
I like that personality bubble. Nice.
Yeah, I mean, I look back at what I was successful in options, and I mean, there would be days where maybe I'd have 4 trades, right? Because again, day trading, sometimes they're quick, things like that, or I'd maybe scale out. But there was truly days of trading ES early last year where I would have, I mean, Ches remembers 50 contracts, 55 contracts, trading 3 lots. So I mean, right there we're at 16. I mean, I guess it'd be like 8, 9 trades a day. So for me, it was just I was trading too frequently. I was being impatient. Top was too tight. A lot of things like that. So, yeah. But anyways, just to kind of get to the end of the road here, translated all that, absorbed it, digested it. Really leaned on the community to help me get my confidence back. And then like September, late last September, fall time frame, I kind of eased back in. Right, I tried to only take 1 or 2 trades a day. I really was proud of myself from the patience standpoint, right? I really identified, like, this is what I'm looking for, and if it's not there, don't pull the trigger, right? And that was something I've always struggled with in trading, whether it was options, penny stocks, whatever. I
was just going to say that. That's, and welcome to the club, but that's the thing I always, and I'm pretty sure I've dropped the hammer on you a few times, like, RD, chill out. Like, I love the ambition, but, man, over trading is certainly kind of, you're one of those things that we all have as traders, quote unquote, one of those things. And RD, it's always over trading is kind of one of those things for you.
Mm-hmm. No, I completely agree, right? And that's why I said I was proud. I mean, I really was proud of myself.
And I am proud of you because that's a big stride for you. I mean, and I realize the listeners are like, oh, why are these guys getting all sappy? No, it's if you had more context, yeah, that's a big step for RD.
But isn't it interesting though? Yeah, hang on. Isn't it interesting though that you? I guess you can tell me if this is true or false. I found it personally that the less I trade, the more money I make. Was that the same kind of thing for you? Because once I started scaling back, because I was in the same boat as you, doing like 45, 50 contracts a day, and I was like, what am I doing? Like, what am I actually looking for here? Like, don't get me wrong, the commissions aren't huge or anything, but I remember me and you used to actually talk about this a lot. Like we'd give half of our profits away in commissions because we're just like, yeah, nailed 3 ticks there and 4 ticks there, and we were just like, yeah, $300 a day. Oh, just kidding, I made $100, and we're like, what are we doing?
Yeah, I mean, we were trying to be like, kind of quasi high frequency traders, right? And that's not our game. So it's that's exactly right. You're spot on. And I think it's proof's in the pudding, right? I mean, the fewer trades I make, the more money I typically make. And there was a couple things I did. I'm big about automating things, right? I want to take all my thoughts and emotions out of things when possible, because I know that's kind of where I fall down. And sorry, Clay, you'd said something a minute ago, but I forgot what it was just now.
I forgot too, so no worries. I'm not offended.
But to your point, right? Fewer trades, right? And like I said, I was proud of myself for that. And what I did was I really backed up. I got rid of the 2-minute chart, got rid of the 1-minute chart, right? I mean, I really backed it up and tried to look holistically. And you have those moments where the light bulb just kind of goes off. I have to give Michael Roach credit for this, because he said, back up and look at the broader strokes. And that sounds so simplistic, right? It sounds so basic, sounds so common sense. But really, when I backed up, got rid of the lower time frame charts, and really was just kind of looking mainly at like a 15-minute and seeing the few indicators I use, right? You can see if there is broader strokes. You kind of keep up with what ES does, like from a day-to-day range, right? Like, okay, when it's in a sideways channel and it's averaging, 10-point range for the day. Well, you kind of know what to expect when it's in that environment, right? So that was helpful for me to really say, okay, I can be patient. I can wait for it to come to me, right? The better if I'm trading long, the better location, the better, right? Not getting in the middle of no man's land, as I call it, and just kind of things like that to really help me back up and say, hey, if there's a trade here today, there's a trade, right? If it comes to me where I know it, I remember now, Clay. Sorry, the risk reward profile. That was really the kind of the icing on the cake, right? By setting up my RVR properly, it helped keep me out of those bad spots, right? No man's land. I mean, really, if I'm using a 2-point stop on ES and I'm looking for a 6-point move, for example, to be a 3-to-1, I can look at the chart and say, okay, well, it has to come to here even for that to make sense, right? I think it could go to here, right, long. Well, I know my entry point has to be here, right? It goes back to the trade plan. And again, it's broader strokes, trade plan. Those seem like easy, just common sense things, but when you really step back and wrap your head around them, it really helps keep you out of trouble. It did for me anyways.
It's a lot different to be patient and wait for the entry than, like me or you, where we would just be like, mark it in. Okay, we're moving here. And it's like, instead of that, just like you said, when you set it up in advance, and I don't remember if you use an IB or one of those, but a lot of brokers have essentially a chart trader. I know Apex did too. Essentially, you can set up and see visually like your RVR, and you're like, oh, that doesn't make any sense at all. I don't think it even has a chance of getting to there. And just like you said, that keeps you out of probably a lot of no man land type trades. And I'm certain that that's definitely helped you out. But obviously, I guess we're still at the point before you took this new job, because obviously you've had to kind of change your trading for that. But before the new job, what exactly were you doing? Were you still doing options and futures like we were talking about?
Yeah, and I mean that's kind of the beautiful thing about it. I mean, the way I adapted in that kind of period of self-reflection, late last summer and into the fall, it really kind of helped me as I transitioned to this new job. I mean, obviously I was still working from home fully, right, in front of the computer every day. But what it helped me with is even sitting here all day, I might only take a few trades. And if anything, I actually was able to maybe work back in some options trading. I mean, I won't even lie. Once I got to where I was looking for a very few specific things in my futures trading, I could even maybe have the bandwidth to pull up a couple of the options charts, right? Was able to maybe get back into the pit a little bit, and maybe if Tesla or Amazon or something was moving. And I got to where I felt so comfortable with what I was doing with futures that I didn't have to focus on it. And I can't explain it. I don't know why this is, but it's almost like the more prep work I did, right, before the market opens, like I knew, okay, it's in the side, we're kind of in a choppy market, the overnight low's close, I'll see at the opening bell, maybe if it reacts with good internals of I had 2 or 3 game plans laid in place before the opening bell. So when it was during market hours, I didn't really have to think. I already kind of knew what I was looking for and could adapt as the market changed. So into the fall, I really took that mindset, right? Very few trades per day. I put a lot more work in after hours before the market to have my trade plan set up, right? Was able to even trade options a little bit, and I pretty much took that all the way into the beginning of this year when I got my new job.
Actually, I want to just make sure I understand, right? But would you agree with this analogy? In real estate, and I've made this before, but in real estate, you don't make money when you sell the house. From a real estate investing perspective, I should say, you make money when you buy the house. Meaning, it's all about the research. It's all about planning what goes into it. Because if you pay too much for a house, or you way underestimate what it costs to fix up the ugly house and turn it pretty, then you are screwed. I mean, there's no way you're going to make any hope when you sell the house. So in real estate investing, again, the money is made when you buy, not when you sell. It sounds like that's what was going on here. You were putting in all the time up front. It sounds like you were doing that the previous night. And then during the day, maybe cruise control is not necessarily the right word, but would you kind of agree with that analogy? Is that essentially what you're saying, is because you're putting in so much work up front that when it's time to quote unquote sell the house, things, that's where your money's being made?
No, exactly. And it goes back into what we were talking about a minute ago with the trading too much, right? When I wasn't putting in that time up front and kind of creating those trade ideas before the market, that's how I was getting into situations where I was trading 40 contracts a day, because I would see a pattern and it may be kind of in the middle of a couple big support and resistances, and I would try to trade it, right? And what this did, by putting in the work up front, like I knew where my risk profiles were, right? I knew where my trade ideas were, so it took all the guesswork out of it during the day. Even if something happened, like maybe we had a period of volatility right in the middle of the day, like if it wasn't in my trade plan, I didn't trade it. I just watched it, right? If I had my order in at 2,000, right, and I knew I had to get an entry there because there was a resistance at 207 and I needed that or 2007 to make my RVR work, even if it missed me by a tick, I wasn't chasing it, right? I wasn't going to mark it in, 2 ticks higher just because it came close, right? So it really gave me kind of defined set of rules, guidelines, and really kept me out of trouble. And like I said, I do attribute a lot of that, as you mentioned, to kind of the pre-work. Really, really helped me kind of take that next step.
Nice. No, that's a great way to put it. And when you have RVR and truly understand RVR, which you clearly do, RVR standing for risk versus reward. And we talk about this all the time, so I'll just touch on it now. Just because you're using a stop loss, don't get me wrong, that's good. That's fantastic compared to not using a stop loss. But there's more to risk versus reward than just simply using a stop loss, because we see stop losses all the time that make zero sense. Why would you put your stop loss there? So yeah, that's a good step for risk management, but that's just a very baby step. So, just for listeners, that just because you use stop loss does not mean you understand risk management. But so you're putting in the work up front, you have your RVR, and it just makes things easier because now well, I'm not going to get in there because that doesn't make sense. So at the beginning of this year, though, we're kind of where that's when you accepted your job. So I guess take us up to that point in your journey, or fill in any gaps that you see fit.
Yeah, so I mean, picking up the new job, I really had to get comfortable with setting orders kind of before the market, right? I mean, it didn't change much from a preparation standpoint. I still was able to draw my risk profiles, kind of get my trade plans in place. What was different was I wasn't being able to sit there in front of the computer, right? Really had to trust my pre-work and understand. Wasn't really able to view internals throughout the day, obviously, as I'm sitting in training and out in the field. So what I did, how I adapted to that, was I backed off from a contract standpoint, right? Really reduced. One part of risk management is position sizing, right? So I reduced my position size all the way down to 1 contract versus 3, just to kind of get a feel, make sure, hey, my mobile device is working as intended. I understand how to place orders, nuance things like that. So I reduced my risk as I've been adapting to that type of an environment. And again, that goes back to the broader strokes. I mean, I can still trade intraday from the standpoint of, hey, I can set my order with my stop losses and targets before the market, right? If it triggers, it triggers. And then I can also still somewhat adjust, if I do have the ability to view, say I'm in a trade and it's working out by 10, 11 a.m., maybe I have the ability to pull up a chart, maybe adjust my stop loss, kind of trail it up, if you will. I really like to put my stop losses under consolidation points when I'm trading ES versus maybe just like the previous candle 8 SMA. So that's really how I like to that's really how I like to execute my stop losses when trading futures nowadays. I've even had to use a trailing stop loss. Like, there's been days where I've known, like, hey, I'm going to have zero access to a chart for the last half of the day. I'm already up 6 points, and I'm just going to set a trailing stop loss at 2, or whatever the case is, 2 points. So that's kind of how I had to adapt to this new environment. And I'll be honest, I'm still working through it, right? I've been out in the field, out of training for about 3 weeks now, so I've got a little more access, right? Mondays and Fridays I'm still in front of the computer, and there's even some days during the week, so it's still just kind of adapting. But I try to take my lessons from last year, when I really, try to identify things a little bit sooner now, market conditions and things like that. That way, when I'm doing my prep work at night and in the morning, I've got a little bit of a better idea how to approach the day.
Yeah, I think that's really cool, though, because you recognizing that, like you said, it really stood out to me, the fact that, I'm not going to have any time at all to kind of look at this stuff, utilizing different orders, whether it's just leaving it under consolidation or just setting kind of a trailing stop loss. I think those are extremely great kind of passive ways to do risk management, because like you said, while if you're sitting at the screen, sure, you could use a moving average or whatever methodology you want to trail your stop, but that's a much, much, much more active approach. And with how busy you are lately, that's not, it's not even feasible. You can't just be sitting in a meeting staring at your phone, moving your stop losses and not listening to anything. That's much more in the realm of day trading. But I think it's actually really interesting, too, because I was going to ask you to kind of clarify if these orders you were setting up in advance were for intraday or swing trading. And obviously you said you could still set up intraday trades essentially by pretty much from the homework you've done the night before. So that's pretty cool. But I know earlier in the podcast you had mentioned that you're kind of taking more of a swing trading approach. So what type of swing trading are you doing? Are you doing advanced options? Are you doing long options? Are you doing swing trading futures? What type of swing trading are you trying to implement into your style?
Well, it's funny you asked that, right? Because it's kind of twofold. I'm kind of swing trading futures, right? Because with the reduced position size, one contract, for example, I feel comfortable holding that overnight, where in the past, holding overnight was a huge no-no for me. I tried it way back when, a couple years ago, when I first started trading options, and I felt like it was just too much of a gamble, right? Especially with options with the time factor involved. So as a rule of thumb, I've never held overnight. Reducing my contract size, my position size overall with futures, if there is a situation where I have a runner going into the close of day, I feel comfortable holding that open, right? And also from a margin standpoint, and I don't have the biggest account, so with one contract, I'm able to, accept those overnight margin requirements and be able to hold a contract through. Also in the morning, is I can open a position maybe at 7 a.m. before I get my day started with work. If I see maybe a strong overnight level that's held, right, I can maybe even initiate an order before market open now and let it play out. So, but the bracket order is really what helps me do that. I'm big on bracket orders. You just have to accept that when you're not actively watching it and it hits target, if my target's 6 points and it hits it, I have to, don't be greedy. Be happy with that. Yeah, sure, it could have, maybe it hit the 6 points and went on another 4 or 5 after that, right? Where if I was actively managing it during the day, I maybe could have captured a little bit more. But that's hindsight. That's 2020. And I just have to be accepting of my risk profiles. And when it hits my targets, when I'm not there watching, I want to be happy with that, right? I don't want to be wishing for more.
Yeah, well, as we discussed last week, and we'll link the video to the. Or we'll put a link in the show notes to the video I've done. When you compare yourself as a trader to hindsight, probably 99.9999% of the time you're going to be wrong, because hindsight is perfect. So to your point, yeah, you coulda, shoulda, woulda but that's just hindsight. Whatever, it is what it is. It's worthless to compare yourself to it, because you're always going to be wrong one way or another. But in the chat room, actually, we had someone. Hey, do you ever talk about how to day trade or how to trade with a job? And you have a job, so walk us through kind of, I know you've mentioned it, you're doing stuff in the morning and night and stuff, but walk us through kind of your stereotypical day as somebody that does work a full-time job. What time frames are you working on things? How long are you doing your quote-unquote homework? Just walk us through a typical day.
Yeah, a lot of it's in the morning, honestly, because with futures.
What time in the morning?
I'm Central Time, so I'm usually up and try to be on around 7.
So that would be that's 6. That's 6 for Eastern Time, right? Or am I going the wrong direction? Yeah.
No, you're wrong way. That's 8 o'clock Eastern.
Oh, 8. Okay, yeah. I never claim to be smart, listeners. Okay, 8 o'clock Eastern. So for you, 8 o'clock Eastern Time, you're doing your homework and stuff.
Yeah, that gives me about an hour to kind of have my coffee and just kind of see, especially like I said with futures, right? Overnight sessions, other markets can influence them. Usually the night before, I'll try to do my recap, right? Document what happened that day, what my,
Okay, so what time at night? I want to nail this down. Just I promise there's a method to my madness here. So what time at night typically?
The kiddo goes to bed usually, anywhere from 9 to 10:30ish. So usually when they lay down, I try to come in here for another hour or so and try to knock that type of stuff out.
Okay, so it could be a late night for you then.
Yeah, it definitely could be. Usually it's in the 10 to 11 p.m. Central Ballpark, and then if I can get to bed by 11:30, then I get a good night's sleep and could be up by 6:45, 7 the next day.
Okay, so thank you very much. So that's why Ches and I and me, I have a job. I don't have time. I don't know. Do you really not have time, or you just prefer to, you want to watch your HBO shows, or you want to sleep in? But to me, here's RD. He has a kid, but he's making time. So how do you trade with a job? Well, you just got to make time to do the homework. You got to make time to fit things into your schedule, whatever your schedule is. I realize everybody's schedule is different, but the moral of the story here, and which RD did a good job of illustrating, is you just find the time, make time. There's plenty of instruments out there where you can be doing swing trading, you can be doing day trading. It's not a matter of your schedule. It's a matter of finding the right strategy that works for you. Again, that's why charts are so powerful, and then making the time to do it. And maybe wow, that sucks for him. He's got late nights doing homework and research, and then he wakes up early to do research and homework before going to his day job. Well, then maybe trading's not for you. Maybe you don't actually have a passion for it if that sounds miserable. But my guess is, RD, you probably enjoy doing that stuff. It's not like it's miserable for you to do that. Is that a safe assumption?
I'll be honest, I don't even have to think about it. It's just something that I enjoy, so I do it, right? I don't have that many hobbies in life, I don't think, but the ones I do are the ones that I've figured out that I enjoy. To me personally, it never really seems like work. Like, I love catching up on the market, especially when there's, lots of news or just things going on.
That's what we call passion right there.
Yeah, exactly. Yep.
Yeah.
The P word.
I love it. It's not, you don't have to think, right? And it's not like my job. Like, sometimes I have to think, like, okay, I need to do this, right? Like with the trading and studying and researching and studying my risk profiles and support and resistances and stuff like that for the next day. It's just I do it. I don't think about it.
Yeah, and I don't remember the quote. I don't remember who says the quote, but it goes somewhere along the lines, if you love what you do, you'll never work a day in your life. So to RD,
Benjamin
this is not
Franklin.
Is it really?
I have no idea. You just Benny Franklin, really?
Yeah, that odds are that's a high probability trade to take. If I do a quote, it's probably Franklin. But in this case, I don't know who it was. But point here is, it's not like in RD's life, it's, I got to do work late at night, and then I got to wake up and do more work before I go to my real job work. No, it's he likes what he's doing. So point here, if you're just getting into this stuff because I got to make money, I want to make money, I see bling, 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 you're going to burn out so fast. It's not even going to be funny. And once you realize that there's a lot of work that goes into it, you'll go into straight gambler mode. And Ches, myself, or RD will gladly take money off your hands, because you'll be buying tops, you'll be selling bottoms, because you're just a gambler out there, because you realize, well, crap, I want to make money. I don't want to put in the work. So let me just put it all on black here and see what happens. So if you don't find the market interesting, I'm assuming you do if you're listening to this podcast, but if you know somebody or come across somebody in conversation, I really need to pay the bills, I got to just make some money, so I'm thinking about this trading stock market thing, just be like, don't even try it. Go deliver pizzas, go mow the lawn for somebody, go shovel somebody's driveway, because if you don't have passion, would you agree with that, RD? You will burn out so fast, given, you got to like what you do in order to have any chance at surviving in the market. Is that a fair assessment on my part?
No, I think it's a completely fair assessment. I'll even take it a step further. Not only do you have to have enough passion and enjoy it to keep doing it, as a new trader, you're not going to pick up a vehicle and know and feel very comfortable experience-wise with that vehicle in a short amount of time. I'm working on over 3.5 years of trading, and you look at how I've evolved from, obviously, like my very early days in the penny market, and then into the options, right now into futures, and I understand these vehicles. I understand what I like, what fits my personality, and that takes time, right? And if you don't have the passion, I don't feel like you're ever going to put enough time and effort to really understand that. Kind of like you mentioned, Ches, with trading with a job. Something I've been slowly starting to work on is my advanced options, because I understand that in my current situation, it's a vehicle, kind of a method I've not really put a lot of time into, but I understand that it fits kind of my daily life now, if you will.
Join the dark side of the casino, my friend. Join us.
And trading. I as you know, recently I kind of tested trading options directionally long term, and there is some scenarios where that may be a good strategy or not. But I've found that if I'm going to be messing with options long term, I definitely want to be on the selling side. So, and again, but that takes more time, right? But I feel comfortable. I'm almost excited to really dive in and learn those, right? I've already been paper trading them. I'm learning, adapting, and working on my strategy with advanced options. But again, that comes from passion. I don't have to sit here and be like, daggum, I've got to work on my advanced options today, right? I just enjoy doing it.
I was just going to say, the thing is that you're not going, ugh, I got another thing to learn. You're like actually excited about it. And then if that doesn't define passion, I don't know what is, because you're excited to kind of learn another way to essentially, keep working on your own kind of independent financial situation. But and that kind of totally ties in to the question I was going to ask. I was going to ask, what are your goals going forward now, especially with the new landscape of the job and stuff? I know you just said you're looking to get into advanced options, but is there anything else you're looking to improve upon?
Yeah, I mean, honestly, I'd like to maybe kind of get to where I increase my position size back to, I like trading 3 contracts and futures, whether it's crude oil or the E-minis. So now that I'm feeling a lot more comfortable with my mobile platform, I'm actually probably going to make a change to interactive brokers soon. So I'm kind of waiting to see how that goes, get familiar with the software over there before I really kind of up my size, right? Because I mean, there's plenty of podcasts and just things we've done over the years in this community where we've talked about position sizing and what that can do to you kind of psychologically. I've experienced that myself. I'm sure a lot of other traders have, and so I really want to be comfortable with that and then my software before I do that. But the other thing was, again, I'm looking at, okay, it's very difficult to be an active day trader when you're not in front of the computer. It's impossible, really, in my opinion. So what's a good strategy? What's a good vehicle, right? Well, advanced options kind of is that, long term. You can check it periodically, once or twice a day, or maybe just a couple times a week even, right, Ches?
Yeah, exactly.
We're kind of answering that question to me. So that definitely fits the mold of what my day-to-day and access levels are. And it's just kind of another area of the market that I'm not familiar with yet, right? I kind of look at my journey holistically, and I've kind of touched this area, options, futures. Now, hey, I kind of want to touch advanced options, so I kind of just understand that other area of the market, because I look at the market as kind of an arena, and I want to someday be able to say, hey, I understand every piece of the arena, right? Every player in the game. I want to understand what they're doing and what they're looking for, and then that way life's going to change, right? I mean, who knows? In 2 years, I could be back to sitting in front of a desk all day where I can day trade again. But at least when that day comes, I'll know how I can adapt and go back to those methods that I've been successful at, right? In doing so. So
that's booyah. That's I think that's a great way to end looking at the time. But the words that stick out to me are adapting and just kind of being self-aware. I don't know if you use the word self-aware, but I think that was the overall kind of theme here. Was that's something that you're always working on and just trying to expand and gain as much knowledge as possible. So clearly we'll have to have you back, whether that's for another yearly anniversary or at some point have you back just to do yet another update. Who knows? Maybe it'll be in 3 years from now, because with the way the community's going, I plan on being around for 3 more years. So we'll see what happens with it. RD, thank you very much for coming back, taking some time out of your day and out of your afternoon to hang out with Ches and I.
No, absolutely. I appreciate having me back. I mean, I know it's I felt a little bit disconnected, obviously being out of town for kind of 2 straight months, but I appreciate you having me on. It's great to kind of get to connect with everybody again.
Yeah, you're like you're just one of the blue chip members. I mean, sometimes eventually it reaches a point where members just become staples of the community, and they could be gone for like months upon months, and then you see them again and you just pick up right where you left off. It's like they never even left. So, and RD is definitely one of those members. So thank you again for hanging out, and looking forward to continuing to see how you develop in your journey. For you listeners, final few things here before we go. If you are listening on YouTube, be sure to check out the rest of the channel. There are other videos just besides these podcasts, so check those out, and hopefully you ultimately decide to subscribe to the channel. If you're listening on iTunes or any of the other podcast players, subscribe, and especially on iTunes, if you wouldn't mind leaving us a rating, that would be very appreciated. And then finally, if you are listening on the website itself, ClayTrader.com, that's where the show notes are, so you can check out all those links we mentioned. But also leave us a comment below. We read those, and click that share button. So as always, thank you to our esteemed co-host Ches. Thank you again, RD, and thank you to you as listeners. We will see you back next week.
This has been the Stock Trading Reality Podcast. Thanks for taking the time to hang out. To learn more about Clay and the Clay Trader community, including the trading team, premium training, and more, visit ClayTrader.com.